revisit our top story, and we do have the man of the moment, Mr. Rana Kapoor of Yes Bank, joining us. Mr. Kapoor, appreciate you joining us. It's just a one-line flash that we have, so perhaps you could give us more details. We understand that there is a confirmation now on that billion-dollar fundraise.
Shereen, good evening. Yes, indeed. We have just about a few minutes ago obtained final approvals of the stock exchanges, both NSE and BSE. And, our placement document has been uploaded and transmitted via Bloomberg, I would like to believe, around the world. We've also appointed, some bankers. Our deal is being led by Goldman Sachs. We have Motilal Oswal. We have CLSA as our global coordinators and the book running lead managers. And in addition, we have 8 other joint book running lead managers, which are a best of breed combination of international and domestic investment bankers. So the process has been rolled out, literally 5 minutes ago.
For just a second.
Yeah.
Congratulations. I'm just going to interrupt you for just a second, and then you can give us more details. I wanted to understand whether this will lead to a dilution of about, 12 to about 13.5%. That was what was anticipated.
Well, if you see our target price, I do expect that the dilution should not exceed, around 10% or so. Should we be able to get a good response overall. So at the current, pricing levels, we like to believe that the dilution will be approximately about, 10 to 11% in that range.
Mr. Kapoor, this is Ritu Singh. Another question for you was the proceeds of the QIP. Of course, it's $1 billion, big money. You'd raised about $500 million the last time around, about 2,900 odd crores. This time, where are you looking to deploy it? Which are the sectors? What kind of credit growth are you anticipating? Where are you looking to use this money?
Well, in our business of banking, especially with the tailwinds in the economy, now, in a way, exceeding the headwinds, we are seeing a fair amount of opportunity for growth. Growth in sunrise sectors like renewable energy, in healthcare sector, pharmaceuticals, in automobiles, in transportation and logistics. We are also looking at tremendous momentum of growth in our SME businesses, which are a key driver for the next few years till 2020. We are seeing a significant uptick as well in our retail banking businesses, in consumer lending. So there is growth which is certainly being witnessed at our bank, as has been demonstrated in the year gone by. In fiscal 15-16, we printed credit growth of 30%. And in the June quarter also, we achieved credit growth of 33%. So we like to believe that Yes Bank is a 30% growth story, at least till 2020, and we have distinct visibility till then as part of our 5-year growth plan, which ends in 2020. So it's a good mix of corporate businesses which are coming back nicely, and the opportunities for a bank like ours to really grow in the commercial banking, in the business banking, and in the consumer banking segments.
But, Mr. Kapoor, could you tell us what your current Tier 1 and Tier 2 capital is? And after you get this infusion, what is the kind of uptick we can expect there?
Well, we are presently, as you know, our overall capital adequacy is well above 15%. And our core Tier 1 presently stands at 10.5%. With this additional capital, which is approximately will increase our core equity by 45 to 47%. So you can well tabulate that the core Tier 1 should go up beyond 15.5%, which means that we will have, once the deal is successfully closed, we will have growth capital for the next 3 years quite comfortably to grow at 30%.
Mr. Kapoor, before I toss it back to Ritu, just a quick question, sir, because we're still poring over the details of your press release. What is the price range, sir?
Shereen, at the upper end, the price range is at 1410. Today's top price was 1450, and the weighted average of our stock today was at 1421. So we are basically targeting, upper range of around 1410. And we have confidence and conviction to believe, based on feedback from our investors, that we should do fairly well. I can't say we will end smack on at 1410, but that is indeed the target.
Mr. Kapoor, also of this $1 billion QIP, could you confirm to us if 200 million would be the green shoe option for investors?
It's a straight $1 billion deal. There is no split. It's one single number, one round number, 1 billion, that's it.
And how much would your book value really go up by after you raise this $1 billion through the share sale?
It's a very intelligent question. All depends on the final price, but give or take, it should add book value of approximately 105 to 110 rupees, basis the fund injection and the number of shares to be issued consequently. So it should add in the range of 105 to 110 rupees.
And, since we're still going through your release, if I may ask the price band exactly, would it be in the range of 1350 rupees?
No, as I mentioned to you that, we are targeting, towards 1400 to 1410, and that's quite an attractive price considering, the share movements last couple of days. So let's see how it goes. The bankers are working on it. They rolled out the deal literally 10 minutes ago. And I'm quite hopeful that with some of the best banks in the world leading this deal, and with extensive meetings that we have had all over the world, my management team and I, particularly the last 4 or 5 months, we do expect that we will get a very good response, and I hope at the upper end of the pricing range.
Mr. Kapoor, just 2 more questions if you'll bear with us. Since the stock has done very well, especially on the back of this news being played up over and over again, give us a reason why long-term investors should invest in your QIP.
It's the best growth story in Indian banking.
Okay, fair enough. Mr. Kapoor, if you won't elaborate further, let me ask you one more question. Being the size that you are, Yes Bank, you're almost 4th, 5th in the pecking order, and you have, ambitions for being much larger by 2020. Some of that growth, we'd assume, could also come inorganically, and now that you have this war chest of $1 billion, would acquisition be a route you'd explore?
I do want to clarify that the deal has just been rolled out. And, when the deal is closed, we will have the capital. Right now, the deal is just open.
Of course, but...
So you caught me at the opening, not at the closing. And when it closes, I'll be more than happy to speak to you again. But, the objective is that, as you have seen, Yes Bank entered its large phase last year in April 2015. And we have a 5-year plan, which is hardwired till March 2020. So you can see that we are practically into the 6th quarter of the 20 quarters of growth plan till 2020. In these 5 quarters, we have demonstrated growth in excess of 30%. And to me, the message is that this growth capital that we mobilize, if we are successful at this QIP, will be maximized for high quality, filtered, risk-sensitive growth. And I think we have the engines in place. We have the vintage in place. We have seen cycles in our economy for a bank which is exactly 12 years and 15 days old today. And we are now all set to become a good large-sized bank in India by 2020. And we like to grow organically at a target of around 30% or so for the next 4 years.
But so is acquisition something that you're ruling out? Is organic growth the only way to go for Yes Bank? Can I get that from the statement?
We actually do not like acquisitions because they impact the HR culture.
Okay.
They divert the attention And three, basis the tailwinds in the economy by far exceeding the headwinds today, the opportunity is organic, filtered, high-quality growth. And my bank has demonstrated that we can grow, the bank can grow 30% even in tough markets as in the last, 1.5 years. And as they become more favorable, with pretty much all macroeconomic, issues looking very, very encouraging, by far the best in the world today. And with the support of the government reform process, with the augmentation of, the overall, let's say, macro, stability factors, the tailwinds are very good in the economy right now, and a banking institution like ours, which has proven itself during a small and medium phase, is very well now conditioned and positioned for the large phase. So we want to be a large bank by 2020.
All right. Thank you so much for joining us on CNBC TV18 first, Mr. Rana Kapoor. So with that, it's a $1 billion QIP. Finally, has been launched with a price band of 1,400 to 1,410, as Mr. Kapoor says. The proceeds will, of course, be used to fund credit growth, which they're very bullish about. They're targeting very high levels. In fact, by 2020, they almost want to double the revenues. So, after 2014, this is in quick succession. The bank clearly anticipates much higher growth, very, much in stark contrast to the rest of the banking system.
Well, that is right, Ritu. And confirming a CNBC TV18 news break, as I pointed out, our colleague Naveen Shetty broke this story several months ago. Rana Kapoor, live and exclusive here on CNBC TV18, explaining the fundraise plans, their $1 billion that they hope to raise. Now,